Money on my mind, 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 money on my mind. So money is all I think of. Money on my mind, money on my mind, money on my mind, money on my mind.
All right. Welcome back to another episode of your favorite financial and business literacy radio show and podcast straight out the Bay Area. You are listening to Financial State of Minds, the show where I help you get to that bag, manage that bag, and grow that bag as best as possible by teaching, speaking, and preaching financial literacy and also a little bit of business literacy as well. I am your gracious host of the day, of the show, every time I'm on, Darrin Harvey, aka Bookity Blindy, Mr. Money Man, Mr. Finance himself. I have many names, but to you, the listener or the viewer, thank you for choosing to watch this episode, whether you're new or whether you have been following me since episode 1. I appreciate you. We continue to record out of Oakland, California, and you are listening to KGPC 96.9 FM if you're listening to the live broadcast or the evening broadcast. Thank you if you're listening to it on kgpc969.org. Thank you if you're listening to it on your favorite streaming podcast platform of choice like a Spotify or an Apple Podcast. Thank you. I appreciate everybody who is giving their valuable 30 minutes, 20 minutes, 10 minutes, 5 minutes, 2 minutes to learn about financial literacy, the thing that I continue to be passionate about. What is this episode going to be about today, Darrin? We are asking you. Well, I'll tell you. Today's episode is a part 2, or it can be separate to a continuation on my credit builder series of videos. So in the first episode, we talked about credit builder accounts that build up your revolving lines of credits, which tend to be card focused. So we talked about some secured cards. We talked about some charge cards, some revolving cards. There's so many names for it. Basically, cards that help you build up your credit that are not specifically traditional credit cards or traditional secured credit card. If you want to learn detailed information about that, please check out my previous episode where I talk about it. It's a great watch. It's only 30 minutes, and it's great for those who this is targeted for. And Darrin, who is this targeted for? Well, if you are somebody who has a credit score of less than 700, this video is definitely for you. If you're in the 600s, and especially if you're in the low 600s, 500s, this video is for you. This radio episode is for you watching. If you are in the 700s, but you want to try to get yourself to the 750s or even the legendary perfect of 800 plus, this video is still useful for you. It's not as urgent for you, but this can be used to build your mix of credit. Yes. Why does this work? Why is this useful? So like I said in the first episode, and this applies to what I'm talking about today, credit builder accounts are special accounts that are meant for the people who are underserved, the credit challenged, the credit impacted, whatever you want to call them, the people who have bad credit. Let's just keep it real. They're designed for those people. But this specific episode, we will be talking about credit builder accounts that are installment or account focused. First off, I have to make clear what is an installment loan. So an installment loan is, for most people, you guys know what it is. It's your car payment, it's your rent payment, it's your mortgage payment. Wouldn't really be rent. Mortgage payment, it would be your personal loan or debt consolidation loan. Those are installment loan types. And to be specific, what is an installment loan exactly? An installment loan is any loan that you take out one time and then you make usually monthly payments, but it can be bi-weekly or weekly payments as well. And you continue to pay it over a course of time. Usually it's years, but it can be 6 months. Just depends on the loan itself. And once the loan has been paid off, then the account is closed. And if you want a new loan, you have to open up a new installment loan. Again, this is primarily car loans, home loans, any type of personal loans, business loans, whatever. If you want to go into business, these are installment loans. Installment loans primarily impact your payment history, like everything else, and not really your car or your utilization rate. Utilization rates are typically affected by revolving lines of credit, which is traditionally a credit card, but also can be attached to your home, like a Kickoff or something like that. So again, today we're talking specifically companies that help out by building your credit using installment accounts. Again, how does this help out though? Like, how is this helping out your FICO score? How does a credit builder account build your FICO score, or how does it work with FICO to build your credit score? A lot of companies, especially your mortgage, when you want to buy a home, they want to see that you've had a history of paying back installment loans basically over the course of years usually. Why? It makes sense. You're going to go get a 15-year fixed rate mortgage loan. You're going to get a 30-year fixed mortgage rate. Or maybe in the future, there's already talks of 40-year fixed rate mortgage loans. They want to see that you're reliable and dependable and you can pay these off at time. So these credit builder accounts will be great for showing them that at a much more reasonable and affordable price instead of paying a mortgage of $5,000 or $4,000 a month like everyone is in the Bay Area. A lot of people are in the Bay Area if you buy a brand new house right now. They help out by attacking or positively impacting your payment history, which again is 35% of your credit score. Also, but say your payment history is 90%, 100%, it's good enough. It still helps you out by having a different type of loan, which is 10%, which is a mix of credit history. It's just adding into that great mix of loans or credit that you've already been building up over time. Or if you need to repair it, you're repairing that over time. And also, it's helping you out with 15% of credit or account history, meaning that you have an account that's been open for 1 year, 2 year, 3 year, 5 year, whatever the length is, and you've repeatedly made successful payments, you never defaulted and stuff like that. So that is the point of a credit builder account. Now, again, this is used primarily to help repair people's credit, but like I said earlier, this can be used to just quickly boost your account. A lot of these credit builders start recording pretty quickly, like within 30 days, 60 days, depending on the type of company you go with, or depends on the type of installment loan that you choose to take. So these are some very effective and quick ways to build up your credit. The great thing about credit building installment accounts is, like their credit building revolving lines of credit brothers and sisters, they almost always credentially, from my research or from what I've been told by clients, there is no hard pull or soft pull, meaning that they're not going to run your credit. There's not going to be an inquiry on your credit, which could and typically does drop your credit score a few points. You're instantly approved. And all of these ones I'm recommending are very affordable. There's some that start basically at $9.99 a month, plus you putting in a deposit of literally $1 a month. So all of these are very reasonable and affordable. I'll even talk about a revolving line of credit card in this that this installment company does offer, and it only requires a $50 down payment. So all of these options are actually more affordable than going the secured credit card route or the secured traditional credit card account, where you have to put down usually a minimum of $200. Yes, these are very effective and great ways to build your credit. Usually there's no APR. If there are interest fees, it's worth it. It's lower, but usually there's no interest fees to these things. And they're really, again, designed to help the person who credit score absolutely sucks. Most of the times, these are not even offered by traditional banks. These are offered by fintech companies who have partnered with banks or flat out have kind of just merged to be half fintech, half banks. So they're not the same as a bank, even though they offer similar products as banks. So without further ado, I'm going to talk about 3 companies that I have either had clients tell me or I've researched and I really recommend. This information is as accurate as when I'm recording, which is in April of 2023. But I don't think fees or things are going to change too much. But again, when you're done listening to this episode, first off, DM me at Financial State of Minds on Instagram to let me know that you liked it so I know what to give you guys as far as content. But 2, go to these websites and make sure that this information is still accurate at the time that you're looking, because it may change due to market conditions and just business conditions. Without further ado, I'm going to just do some very brief overviews of these 3 companies, give you my thoughts, and then tell you how even somebody with a 700 could use this to boost their credit score up to 750 plus and how that benefits them. So without further ado, let's go. First company I want to talk about is called Brigit. Brigit is a credit builder company that has a credit builder account. You simply pay a $9.99 a month membership fee, and then that allows you access to their system. And basically, they just open up an account for you. Essentially, it's a savings account that you deposit money into. The great thing I like about Brigit is that you actually can deposit as little as $1 a month. Yes, it's the only company I'm aware of where you can only put down $1 a month. So this is truly for anybody who has any level of financial security or insecurity, however you want to put it, where you are in your financial status. This is probably the best service for you when it comes to that. So how it works is you open up an account, and over time, those deposits come in. Again, you can do $1 a month, but you can, of course, do more. And I always recommend you do more because credit card companies obviously, or sorry, not credit card companies, the credit bureaus love to see that you're making more than just $1 payments, right? You want it, the more it is, the better it looks for you. So it's obviously better to put down $100 compared to $1, or it's better to put down $50 compared to $1, or it's better to put down $250 over $1. But whatever you can afford, it doesn't matter. It still helps your payment history. So you do this until the specified amount is put in or deposited into the account. And then once this amount is put in, then the savings account is essentially freed up and you get your money back minus any type of fees or interest that they charge. But as far as I know, it's just a membership. But again, double check that. That's it. It's that straightforward, you guys. This is a great way, again, to build up that installment payment history. And that payment history makes up, again, 35% of your credit score. So it really is that simple. I've read reviews. It's like a 99% positive reviews that I've researched. People really love it. Not really too much negativity I've seen at all. And pretty easy way, you guys, to build up your credit. That is Brigit. It is an app that you can download, I believe, onto your iPhone and Android. You can go onto their website. It's pretty quick and easy. I believe it actually attaches to your bank account, checking account. I could be wrong about that, but I'm pretty sure it attaches to your checking account. So you don't have to like create a brand new checking or savings account. I believe that's how Brigit works. So that's Brigit. Comes highly recommended. The next one is without a doubt the most popular one that people use. I personally know somebody that has used it, and I will talk about their experience after I explain what this is. And this is Self. They are known, the company name is called Self Incorporated or Self Inc., but the brand is just Self. Self is the flagship, number one kind of standard of credit builder installment accounts. So how does Self work? So Self essentially is very, very similar to Brigit, but it's a little bit more expensive. So you can pay as little as $35 a month across 24 months. And there's a range of 4 options, the maximum being $150 a month across 12 months. You have those options, whatever fits your financial situation the best, you can pick. You create an account with Self, and essentially they're creating or opening up on your behalf a certificate of deposit account, also known as a CD. Now, what happens is that $35 a month is going into the CD, and it's essentially a savings account. That's what CDs are. It's a type of savings account. And then over time, I believe it's over, like I said, 12 months up through 24 months, you keep paying into the CD account. Each payment is considered a payment onto an installed loan, which will again get reported to the credit bureaus. I believe with this one, it's only reported to, no, I'm pretty sure it reports to all 3. Pretty sure it reports to all 3. It may report to 2, but I'm pretty sure it reports to all 3 of the credit bureaus. So once you do that for 24 months, your money is freed back up. You can access it into your savings account. And what they do is they take out a $9 a month payment across each payment you do, and any interest fees that they may incur over that time. Other than that, that's it. So you'll have completed, let's just say maybe a $2,000, $4,000, $100, whatever type of loan. And then that is reported to the credit bureaus that you paid off that loan, again, increasing your credit score and positively impacting that credit score. Now, this one, I will, just be transparent if I haven't alluded to already. I have not used any of these services personally. I have researched these all for a couple hours, but when it comes to Self, I have somebody, my client, who has personally used this service. They were using it actually before she became a client. And what she reported to me is that Self has definitely restored her credit. Her credit score has gone up over 70 points since she started using Self, and it knocked her out of the 500 realm, the high 500 realms, up into where she's at right now, which is like 670 right now. So she's definitely usually recommending Self. Also, and I'll add on to this, Self offers a revolving credit builder card, a Visa card. It's called the Self Visa Credit Card. So what is this Self Visa Credit Card? The Self Visa Credit Card is essentially a secured credit card that's kind of a hybrid between a credit card and a debit card. Also, previously, like I talked about, they can be called charge cards or whatever. These are credit building revolving lines of credit, and it's a credit card in this form. It's a Visa card, and you can use it as you can to purchase whatever you want. Your daily expenses is what is recommended. You have access to the Self Visa Credit Card once you've made 3 consecutive successful payments and you have at least $100 into that CD account. So once that card is opened up, now you're attacking or you're positively impacting that revolving line of credit history as well, adding to that great credit mix that I was just talking about earlier. Self is great because you literally can attack both the installment type and the revolving type of credits and boost those up with your payment history with one company with very minimal payments. And I believe the down payment for that credit card is just $50, but I could be wrong. It may not be no down payment. Go ahead and double check that website. Pretty sure though, it's just attached to your CD account, or they use that as collateral. Self, it's known in this industry, in the credit builder industry. Again, it's the go-to. It's the one everybody thinks about. It's real. It's not a sham. Again, feel free to DM me if you want testimonies of somebody who would love to talk to you to see if this works. She's had it, I believe, for a few years now, and she still has her account. She still has that credit card. There's no reason to close it because, again, if you close your credit cards, if you close any card, that closes the account history, and that negatively can impact your credit score. So the third service is called Kickoff. So what is Kickoff? Kickoff is what I'm about to tell you. Before I tell you this, you've been listening to KGPC 96.9 FM Financial State of Minds, the radio show that helps you get to that bag, manage that bag, and grow that bag as best as possible through financial literacy and business literacy. And I'm talking about credit builder installment accounts. Sorry, I had to put that in there. They make me, you guys. They make me. Or they'll cancel me. Just playing. What is Kickoff? Kickoff, again, is it's like a Self, and it's like a Brigit, but it's a little bit different because, like Self, it can actually help you in multiple ways. So what you do is you put down, I believe, $5. I think it's $5 is period. You just put down $5 deposit. No, I'm sorry. You pay $5 a month. Kickoff will open up a revolving line of credit that is up to $750. That's one service right there. You're just paying $5 a month, and then now you're positively impacting your revolving line of credit history, along with payment history and all the other things I've blabbled about already. The next thing that you can do is, once you have that $750 line of credit, you can use it to buy products from the Kickoff store. And the reason I support this is twofold. One, all their products are financial literacy based and financial wellness based. Why not, starting at $10 a product, buy a book, become a guru like me, and make money being a consultant like me? Not misplaying, but just to educate yourself further beyond just listening to people like me. And number two, the main reason you want to do that, even if you don't want to read a book, is that payment is reported as an installment payment. So every time you buy a product, that payment is reported to the 3 credit bureau gods themselves. And if you need a reminder who they are, TransUnion, Equifax, and Experian, it's reported to them as installment loan payments. That is literally, again, hitting the 2 ways that will help you out: revolving line credits and installment loans. You do that for a little bit, and then Kickoff also has a card themselves. And I believe I believe if you put down a separate $50 deposit, then you get access to the Kickoff card. And then it's a separate account that acts as a debit and savings account in the card. And you use it to spend, and then those payments are reported as positive payments to the credit bureau history. Kickoff, it's kind of like the company that does everything. It does all 3. It's a great company if you want to attack all those 3, and if you want to get your education on financial wellness as well. Those are the 3 companies I recommend. There's a 4th one that I've actually heard about, which is Credit Strong. The reason I'm not going to talk about Credit Strong is because when I talk about this in the business land of worlds, because there are these services for business accounts and business owners in the world of business credit, I know Credit Strong when it comes to their business credit building products. I don't know them so well when it comes to the personal, but if it's anything like their business, it works the same way, where you create a Business Strong account. I believe the personal site calls it the install product, and you literally put down an amount very, very, very similar to Self, where I believe it starts at $28 and then it goes up to $48. And then you put up a maximum of, I think, a few thousand or maybe 1,000. And then it's the same thing as Self. You just put it in, and then those payments count as a positive payment to your credit score. I need to research a little bit more about that, but I know I've heard good things about their business side, so I'm assuming their personal side is good as well. I got to wrap up this episode soon because for some reason it's already been 30 minutes or close to it. But again, I've reread it 1 billion times, and I'll say it one last time. These are probably the most effective ways to build up your credit score. Really, it's that simple. Now, for the people who are like me, I have a credit score right now of 740. It's dropped a little bit from my little 800 because I'm holding balances, but I have a pretty good credit score. I still might sign up for one of these services because it's still attacking the mix of credit history, which I believe is 15%, and then the credit account length of history, which is 10%. So that could still boost my credit score by hitting those two 25% total or combined. Why should you do that if you have a 700? Why should you do that if you have a 690 or a 710, which are all good credit scores? Right now, as I'm recording in April 2023, we are in one of the hardest, if not in my lifetime, the hardest time to borrow money. Banks do not want to lend you money. They don't, or they do, but they're going to be very, very picky. Lenders are being very, very picky about who they borrow from. So interest rates are higher than normal. Your interest rate is higher if you get something right now than it was literally 6 months ago or 9 months ago with the exact same credit score. So it's very important to have the highest credit score possible right now to get the best products possible. I just got done talking to somebody who was looking to get a car. I said, use some of these products and boost your credit score up even just 30 points, hopefully get it to 740, because at that range, you're going to get better interest rates. You're going to get better loan offers on that car or anything you're looking to acquire right now. Times are rough when it comes to lending, and I definitely advise people to consider these options. Check back in the previous episode when I was talking like services like Extra and Chime to build your credit score up. They're all very affordable. Pretty much every listener who's listening right now should be able to do any of these. They're priced great, and they will help you with your credit. They will help you in sometimes as quick as 30 to 60 days. But to maximize their benefits, it's going to take the entire 12 to 24 months or even more if you want to see the maximum amount of positivity when it comes to increasing your credit score with these products that I mentioned. That's it. We're done. Yeah, we're done, you guys. I got nothing else to say. If you guys don't have better credit scores in 24 months, I don't know what to tell you. Oh, we're still recording because we got a minute left. Okay. Well, you guys have been listening to your boy, Blickety Blinding himself, Darrin Harvey. I am your gracious host of Financial State of Minds. Thank you for listening to another episode. I hope you got great value, great entertainment of listening to finances and restoring your credit and boring stuff that I know may not be the most interesting thing, but we all know will impact us positively greatly. That's it, you guys. I hope you guys had a great day. I'm kind of restored coming back from my vacation in Cancun. For the viewers who are watching, you see this shirt right there, Cancun. I may even talking about how I got that trip down from $3,000 to $450. DM me at Financial State of Minds if you want to hear how that happened. But I'm out of here, you guys. I need my chicken sandwich. It's been 2 weeks. I always get it. That should just be the joke. Felicia, that should be the joke, right? I always say I'm going to get a chicken sandwich when I leave the episode. She's over here laughing. All right, you guys. Peace, kings and queens. Love you guys. Peace. DM me, Financial State of Minds, for a consultation. Let me know that you heard my show, and I'll make sure I give you some bonus time. I'm out of here.